The mandate requires us to invest in interest-bearing asset classes that's expected to render the highest return over a certain period. Asset classes in this context include cash, nominal bonds, inflation-linked bonds. The mandate will allow us maximum flexibility in terms of allocation to these various asset classes as well as fund modified duration. The benchmark of the fund is a combination of the JSE All Bond Index, the Barclays Inflation Link Index and the STEFI Money Market Index. We do allow for flexibility in determining the benchmark of the index, both in terms of the underlying indices as well as the weights allocated to these indices. The inception date of the fund is June 2010. If we look at performance over a rolling 3-year period, in this case ending April 2014, the fund has outperformed its benchmark by a healthy margin. Just for the record, the performance target of the fund is benchmark plus 1%. I think it's more important to note though that the fund return over the same period was higher than that of any of the 3 individual indices in its benchmark. It's also interesting to note that the fund outperformed the Futuregrowth Core Bond Composite as well as the official headline Consumer Price Index. The good performance of the fund is mainly attributed to good allocation decisions by the interest rate team. In other words, we've managed to pick the best asset class that's included in that benchmark in anticipation of changes in the interest rate cycle. Given the nature of the mandate of the fund, performance is very dependent on the interest rate view and interest rate strategy. So clearly, if we get that wrong, the fund performance will be affected both in an absolute and on a relative basis. Secondly, it is important to note that we tend to take long-term investment views, and those investment views are implemented by using short-term market volatility. So it's very, very possible for the fund to be reflecting short-term return volatility. The interest rate process endeavors to combine our macroeconomic outlook, current market valuation, as well as our best estimate of fair value to inform us about the most appropriate allocation to the different asset classes, stock selection, sector selection, as well as fund modified duration. This product allows for greater flexibility in managing interest rate risk. So for those clients who are sensitive to negative interest rate movements, who are not in a position to allow greater credit exposure, this product will probably fit best.